those inflation numbers a real blowout. In terms of investing strategy, where do you want to be and where do you want to definitely not be if inflation really starts to rip?
Yeah, I mean, certainly the transitory versus structural question is still in play. You know, we're of the view that, like President Daly, it is going to be transitory. So for the most part, at this point, we've priced in as much as we can with the Fed. So I think rates at this point are going to be relatively stable from here. The long end has remained fairly well entrenched in kind of this transitory view, and as long as that's in there, risk is ultimately fairly well supported. Now, if this proves incorrect and the Fed has to hike earlier, potentially earlier than June, given that they view inflation as being a much bigger problem, you know, then certainly various parts of the cyclical discussion, various parts of the technology discussion within the equity markets become more of a challenge, and longer duration becomes a bigger risk because it's really been the anchoring of those long-term yields that has kept a lot of the risk complex fairly stable.
Well, Marvin, there's a very diverse range of opinions here, and I must say you're at the conservative end of the spectrum. If we take a look at this chart on the Bloomberg terminal, the markets are now pricing in 5 rate hikes between now and December 2023. So where do you put the risk of a policy error here?
Yeah, so you know, certainly you know, 5 rate hikes within the next 2 years is much more than it was, you know, 3 to 6 months ago, and we pulled a lot of that forward. Now, if we were to pull the chart a little further, the number of hikes after that 5, however, are not that significant, which means that ultimately yields remain fairly well anchored, and in an environment where inflation is expected to tick slowly back down to normal, real yields remain fairly low, which again remains somewhat supportive of risk assets.
What happens to the inflationary outlook if we get the bigger $2 trillion spending package? Of course, this also would come at a time when we have probably more volatility, given that the stopgap funding measure will run out around December.
Yeah. So the bigger stimulus package, ironically, won't have that big of an impact on near-term inflation. It's for the most part funded with tax increases. So if anything, it could close the deficit a little earlier because those taxes will come in earlier than the money will actually be spent. But more importantly, it's over a 10-year period, whereas we're dealing with, like Fed President Daly said, COVID-related issues, and we'll know within the next 2 to 3 quarters how much of these shortages and supply chain issues remain, and hopefully by then we'll be looking at COVID in the rearview mirror.
There's been a lot of speculation about the reappointment of Fed Chair Powell, with the Fed Governor Brainard also talking to President Biden. What are your expectations on this front? And if we do see a change at the helm of the Fed, will that have a meaningful impact on Fed policy?
You know what? I still think Powell is going to be reappointed. I think it makes sense. I think there's enough things going on with regard to Fed policy and inflation that continuity makes sense. It's really maybe the more progressive part of the congressional wing that is pushing Lael Brainard a little bit harder. There are ways around it, possibly having her get more involved in bank supervision. Having said that, I think that if we're looking at the inflation numbers that don't really back off the way, you know, every Fed member is saying that they expect it to back off, for the most part, I don't think there's much policy choice for them to make. You know, they still are going to be guided by the mandates. They're dual mandates, and if those prices are unstable, while the jobs market is improving and continues to show gains, the Fed's hands are really somewhat tied in terms of what it should do next.
If you drill into those US inflation numbers, we see some pretty good big gains for gasoline prices, fuel oil as well. When do you see those pressures starting to ease?
Yeah, I mean, certainly we're seeing the energy prices stabilize a little bit more. You know, the way I kind of look at the bigger contributors to this month's gain, it's been shelter, it's been energy, and it's been food, which has been accelerating recently. Each one of those is a tax on the consumer. Most Americans need to put gas in their car. They obviously need to put food on their table, and they have to pay their rent. if those numbers keep increasing, it will have an impact on other parts of the consumer discussion. And again, once hopefully we get past these COVID shortage issues, we'll be able to see how that consumption demand starts to affect prices that look a little bit more normal. But I would expect some of the energy prices to start to stabilize as we go into the beginning of next year, after maybe the heavier travel that occurs during the holidays here.